Hooty hoo, all my stock market gamblers. Welcome today. Monday, stock market's back open. What's going on? We're in rally mode still. Dow's up about 350. NASDAQ's up about 50. So why are we in rally mode? Well, on Friday they came out with this, let's just call it a Fed whisperer. Now, I never heard of a Fed whisperer. I took all those econ classes, and they never once mentioned a Fed whisperer. Now, back around the year 2000, I saw the movie The Horse Whisperer. That was with Robert Redford, and at the time, I was in the horse racing business. I thought, this is great. I'm going to whisper to my horses to run faster. Well, guess what? It didn't work. Had a very wealthy friend. Anyways, his dog barked a lot. He hired a dog whisperer to talk to his dog, paid $10,000 to tell the dog not to bark anymore. Guess what? That didn't work either. Well, will the Fed whisperer, will that work? Well, what is the Fed whisperer, first of all? Well, it's a guy named Nick. Nick writes for the Wall Street Journal. Now, Nick came out on Friday, and he says that the Fed is going to reduce the pace at its increasing rates. He's the Fed whisperer. Now, where did he get the information from? Well, he probably got it direct from the Federal Reserve. I wonder if he did any trading on that information. Do you think he made any profit on his article when that came out? I think somebody made a lot of money on Friday. I'm not sure who, but somebody did. So, okay, so what do we got? We got three different markets, really. Let's start with the NASDAQ. NASDAQ's sitting right on its 20-day. All right, the S&P, it's in between the 20-day and the 50-day. Okay, now what about the Dow Jones? Dow Jones is actually above the 50-day. Okay, so what do I see happening here? Well, I see the excitement of the Fed whisperer cooling off. I see it cooling off. So he floats out this rumor, the rumor that the Fed's going to pivot. Now, is the Fed starting to pivot? Did the Fed blink? Maybe they did, maybe they didn't. Now, if they did start to blink, well, is that good or bad? Usually, if the Fed pivots, they pivot for a reason, and it's usually not a good reason. They pivot because they see something's broken. Now, we have an extremely exciting week right now in the markets, in the stock market. All right, we got the top 5 companies reporting. That'd be Facebook, it'd be Microsoft, Amazon, Google, Apple. Okay, so those 5 companies, they're all in the S&P 500. Now, if each company was weighted equally, that'd only be about 1%, right? 5 companies out of 500, you got 1%. But those 5 companies make up over 25% of the S&P 500. Now, I'm going to be watching these earnings because I love to trade that SPY. Now, I think we're going to get a lot of volatility this week. Maybe one beats, maybe one misses. They're going to be all over the road. But we've now pushed up. Okay, now if you look at the SPY, which is what I like to trade, it's really been in this range, all right? So it's right about where we were a month ago. It really hasn't done much. It dropped down to 350, rallied up to 380, and we're sitting close to the top. But we're in this range between 350 and 380, but we're at the top of the range. Now, could the S&P, the SPY, could it rally up to the 50-day moving average? Absolutely. Now, I think I would be a seller if we get that high. That's about 386. We're sitting right around 378 right now. But we're at the top of the range right now, kind of in no man's land. I actually think that there's going to be an opportunity to buy this at a lower price, probably around the 350 level. Maybe not quite that low. Maybe we come down and make a higher low before we get this short squeeze. I think we're going to have a big short squeeze going into the end of the year. Look at these mutual funds. They're sitting with a lot of money in cash. They're going to have to put that to work between now and the end of the year. So they basically have 2 months to put that money to work. They cannot report at the end of the year that they're in cash. That's just not acceptable. People don't put if they want cash, they just keep their money. They put it in the mutual fund so the mutual fund invests for them. They can't be sitting in cash. So we're going to get the mutual funds buying. We're going to get a lot of stock buybacks happening. A lot of companies will be allowed to buy their stocks back. Okay, so anyways, I expect this short squeeze going into the end of the year. That's what I see in the stock market. Let's move over to the real estate market. Now, a lot of people think that, well, Okay, so we're in this real estate correction, they call it. We're in this correction. We're coming down and prices have dropped about 10% in the real estate market, a little bit of a correction. They think this correction was caused because interest rates went higher. Now, it is true when interest rates go higher, houses prices come down. That's true, okay? Common sense, an eighth grader could figure out why, right? All right, so we went from 3% to 7% and the prices came down 10%. So this little correction, now, a lot of people think as soon as the Fed pivots and reduces interest rates, that the mortgage rates will come down from this 7%. They're actually approaching 7.5% right now. But they'll come down and they'll get back to below 5, below 4. I don't believe that. But now, if you believe that, and then the people believe that once the Fed pivots, that the houses will start to go back up again. Well, you see, history, if you follow history, it'll tell you that that's just not how it works. Let's go back to the 2008 subprime crisis, right? Now, everybody tell me they're very different, and they are. I agree with that. But in 2008, that's when the Fed pivoted. They pivoted in 2008. Now, when did the housing market bottom? Well, the housing market bottomed 4 years. 4 years later in 2012. Now, what happened in 2009? Well, they printed $3.6 trillion, trillion with a T, to prop up the housing market, specifically to reinflate the bubble. But yet houses kept coming down for another 3 years. Now the stock market did bottom out in 2009 once they printed that 3.6 trillion. It did prop up the stock market, and then the housing market bottomed in 2012, and we've had this run ever since. And in my opinion, this run has been fake. It's been a fake run. We never let the 2008 subprime crisis, we never let the housing market flushed out. It was down 34%, and that's a lot, right? But it never flushed out. They never let it fall to where it should be. They never let it fall to market levels. If you take the Fed out of the game, there's a price discovery at that point. But instead, the Fed continued to print trillions and trillions of dollars, right? And they continued to buy these things called mortgage-backed securities. Bought 3 trillion of them, and this has given us the run-up in the housing market. And it's been straight up, right? But okay, so how do I know when the house market's ready to bottom, Mike? I mean, isn't the Fed pivot the sign of the bottom? No, that is not the sign of the bottom. I'll tell you what the sign of the bottom is. All right. The sign of the bottom comes, right now we have 3.6% unemployment rate, all right? All right, it's going to go much higher. There's mass layoffs coming. A lot of big companies are laying off 20 to 30% of the workforce. If you listen to Elon Musk, he's going to lay off 75% of those workers at Twitter. Now, if you listen to the corporations, though, they'll tell you all these layoffs, this 20 to 30% mass layoffs, these are non-essential workers. Now, why would you hire non-essential workers in the first place? If you don't need the people, why hire them? Well, obviously they needed them, right? So they're going to lay off, let's just call it 20%. But that's not the point. And not every company's laying off 20%. But look, if you just get 5% layoffs, 5% layoffs, you're going to get a crash in the stock market. You're going to get a crash in the housing market with just 5% of the people being laid off, because those people aren't going to have money to pay their mortgages, all right? And just because only 5% get laid off, the other people see this and they start to worry. They don't spend money, so the economy goes down. So where is the bottom in the housing market? The bottom is in the housing market will be when you get the flush out of all these layoffs. Okay, these layoffs are coming in, and it'll be where unemployment peaks. Now, unemployment, according to our government, right around 3.6%, I think they're claiming. It's going to get up to 9, 10, 11%. And then it's going to start to come back down, okay? And maybe it gets up higher than that. I don't know the exact number. But where the housing market bottoms out is where the unemployment number peaks, okay? So you get that unemployment up to 11% and starts coming down 10, 9. That means that the housing market has seen the worst. That means that it's starting to bottom out. Now, another thing with these mass layoffs, okay, these mass layoffs, there's these things, they're called zombie companies. Zombie companies. Now, in the S&P, that's about 20% of the companies are in the S&P 500. So about 100 of the companies are what's known as zombie companies. Now, these zombie companies, a lot of them are not going to make it. Now, what is a zombie company? Well, it's someone that can't pay their bills. They don't bring in enough cash flow, right? They don't make any money. Some of these companies never made money. Some of these companies should have never gone public. But when you have all this printing of money, all this free money from the Fed, you can bring any company public because there's this money floating around that wants to buy these companies. These companies would be things like Uber. Look I love Uber. I use Uber, but it's not profitable. Things like Robinhood. I know you guys are trading on Robinhood, but they don't make money. WeWork never made money. DoorDash is another one. Does not make any money. There's zombie companies. And a lot of these companies aren't going to make it anymore because they have to borrow money to stay in business. And there comes a point where no one will loan them any money unless it's up at exorbitant rates, 10, 12, 15%. So these companies aren't going to make because they can't afford to pay those rates because they can't even afford to pay the bills to keep the lights on at the company. So you're going to see a washout of the zombie companies. Now look at this real estate thing. You look at it takes time to play out. I'll be the first to admit that. We're probably in the second inning, 12 to 18 months down the road. Actually, this time next year when we're talking, I bet we're talking about a glut of properties that have come onto the marketplace because either people dumped the houses trying to get out. You see the race to the bottom. The first seller that gets out, that's actually the winner of the race because it's a race to the bottom. It's a race to get out. The prices have already started to drop. And, if you get out now, you can get out close to the price Billy Bob got. But the race is still to the bottom. And I know that race in your area probably is not going on because in your area, nobody ever sells. But most areas, it's a race to the bottom. Where I live, it's a very, very big race to the bottom. Sellers, they're slashing the prices. The listing prices are just dropping like a rock. Price reduce, price reduce, price reduce. And of course, it's price improvement if you're a real estate broker. Well, anyways, I hope you enjoyed this rant today. I hope it made some sense. I hope I didn't get carried away too much. If you like it, thumbs up. Why not? It's Monday, boy. I got some good stuff to talk about later in the week. We got those 5 big, largest companies reporting earnings. Up, down, volatility is going to be all over the road. You want to come back? Hit that subscribe button. I'm Tall Mike. Get out there, everybody. Have a great Monday. We'll talk real soon. Bye-bye now.